It's Friday the 23rd of August 2013. This is a brief market update from AHDB HGCA. My name is Jack Watts. I'm a Senior Market Analyst within the Market Intelligence division of the AHDB. Recent price declines have been quite notable for grains across the world, and of course in the UK as well, essentially as we've had a very good growing season across the Northern Hemisphere. Markets have fallen now with feed wheat futures in the UK for November delivery reaching close to £150 per tonne. The main driver behind that is the very good growing conditions. Essentially 2013 is panning out to be the best growing season, or the most normal growing season since 2009. In 2010, 11 and 12 there have been another number of weather issues which have driven production issues. In recent days we have seen some support to the price, supporting the price above £150 a tonne on the November futures. The primary driver of that is concerns coming out of the US Corn Belt. Essentially the arrival of warm, dry weather is causing some concern for crop yields, which is amplified by the fact that the crop is later this year in the US because of the late spring. That all creates a lot of uncertainty for the marketplace. Currently as well we have the pro-farmer crop tour going on in the Midwest, and that will hopefully give the market a little bit more information as towards yield expectations, not just for maize but for soybeans as well. There's a lot of mixed opinion at the moment towards this impact of the weather in the US, so it's really uncertain to say what kind of an impact this is going to have on market price direction. Other issues really to consider going forward include this big issue of the fact that the world is facing a rebound in global grain production in 2013. That's a huge issue for the price, and that's what the prospect of that is, putting downward pressure on that price. The big driving force behind that is maize. With maize, it's a later harvested crop than wheat, so the world is still really waiting for the Northern Hemisphere maize harvest. Then the reality of that harvest will again have an impact on the price. And if we don't see any weather issues emerging or no changes to the production forecast, it's likely that the physical arrival of the maize crop from the Northern Hemisphere harvest will put further downward pressure on prices. This is all subject to weather and subject to any revision of forecasts by the likes of USDA. Other issues we need to consider for the forthcoming season: rebuilding demand, re-stimulating demand. Last year was all about the market rationing demand, principally rationing feed grain demand because of the tight supplies principally of US maize. For the coming season though, although supplies are expected to rebound, the market needs to re-stimulate demand, needs to get demand back up to trend levels to try and balance the global supply and demand. Having said that, and although the market is expecting a surplus of feed grains this year, stocks are still likely to remain historically quite low, although not as low as last season. As a result, markets are going to remain firmly aligned to the weather, so anything out of the ordinary from the weather is going to have a direct impact on crop prices. Stocks are still expected to be relatively fragile. What the market would like to see is a continued run of good crop years to build stocks. That's very unlikely to happen considering the weather that we've had over recent years. Other issues we need to consider include Chinese import demand. We've been aware of the import demand on the soybeans from China over recent years. That may well start spreading into the grains now. Last year was a little bit about maize. This year it's about wheat to an extent. Concerns over Chinese wheat quality, buying of US cargoes, of Australian cargoes. So that's going to be a key factor as well. Outside of the usual supply and demand, we really need to consider the impacts of the macroeconomy, notably the impact of volatile exchange rates. That's always going to be a threat, and so it's always worth bearing in mind what the macroeconomy is like to spit out. For the Eurozone, which is relatively quiet at the moment, we've got German elections coming up in September. The risk is there that we see that resulting in some volatility in the value of the euro, and so impacting import and export parity levels. All of these issues and more are going to be covered at this year's Grain Market Outlook Conference, which is taking place on the 15th of October. Please see hgca.com for more details on the conference, and look forward to seeing you there.